What if I told you that the traders who make the most money don't trade to win? Sounds insane, right? But this is the uncomfortable truth that Tom Hougaard, a former city trader turned high stakes trading psychologist, discovered the hard way. Every beginner enters the market chasing wins. They want to be right. They want to beat the market. They want to win more often than they lose. But almost no one survives the game with that mindset because they were never taught the most important skill in trading: how to lose well. You've probably heard that most traders lose money. That's true. But why do they lose? Not because of bad systems, not because they didn't study enough, not because they didn't have the right indicator or strategy. They lose because they never developed the mental strength to handle losing. That's the real failure, because every trader, no matter how skilled, will lose money. That's part of the game. Loss is not a flaw in trading. It is the design of trading. But most people treat every loss as a proof they're doing something wrong. They panic. They doubt. They spiral. And that emotional reaction becomes their downfall, not the loss itself. Tom was once like most traders: intelligent, technical, passionate, desperate to win, and he still blew up. Again and again. Until one day, after a six-figure loss, he stopped trying to win and started learning how to lose. That was the turning point. That's what this video is about. We're going to take you deep into the psychology of elite-level trading. Not the theory, not just tips and tricks, but the inner war that every trader faces. How to manage your fear when money's on the line. How to train your nervous system to act calmly under stress. How to trade through drawdowns, losing streaks, and doubt. How to stop measuring your worth by your win rate. How to stop needing to win and start executing like a pro. The real goal of trading. Everyone wants freedom. But what they don't realize is that freedom doesn't come from money. Not in this game. It comes from emotional control, from the ability to trade well, even when things feel awful. That's what Tom learned. That's what we'll learn together. Before we begin, write this down and tape it to your monitor. I am not my P&L. I am my process. Say it out loud, because this video isn't just about trading better. It's about becoming someone who can survive the markets and yourself. So, if you're ready to see what really separates the 10% from the 90%, if you're done chasing hype, signals, and fast wins, and you're ready to see losing not as failure, but as a path to mastery, then buckle up. Because in this world, the best loser wins. Lesson 1. Your mind is the real strategy. You don't trade the market. You trade your beliefs about the market. That quote hits hard, because most traders don't realize this until it's too late. They spend years trying to fix their charts, switching systems, buying new indicators, following the latest mentors. But they never stop to ask the real question: what's going on in my mind when I trade? The market doesn't beat you. Your mind does. Let's be brutally honest. The market is chaotic, but it's fair. It doesn't know who you are. It doesn't care about your dreams. It just moves up, down, sideways. No emotion, no agenda. But you bring all of your baggage to the screen. Fear of being wrong, need to be validated, impatience to make money now, greed when a trade goes your way, shame when it doesn't. And when you click that mouse, it's not your strategy that's in control. It's your nervous system. That's the problem Tom Hougaard uncovered. He realized it's not the system that breaks down, it's you. Tom's turning point. System was fine, mind was not. Tom had what most traders dream of: a clean, proven strategy back-tested results, a clear trading plan, decades of experience, and yet he kept losing. Why? Because his emotions hijacked his process when it mattered most. He'd deviate from plans, chase entries, cut winners, and double down on losers. Not because the system said so, but because his ego and fear screamed louder. He realized that his beliefs, habits, and mindset were the real system being traded, not the indicators. The illusion of technical mastery. So many traders think they just need more knowledge. If I learn price action, I'll finally be consistent. If I understand Fibonacci, I'll stop losing. If I buy this course, I'll become profitable. But Tom says this clearly. Technical knowledge is average at best. Mastery of myself is what makes the difference. He spent over 10 years trying to outsmart the market. But the turning point came when he stopped treating the market as the problem and started treating himself as the project. The shift from market obsession to self-observation. Tom began observing his thoughts like he observed charts. He stopped asking, what setup is forming? Where's the resistance? And started asking, what emotion am I feeling right now? Am I trading my plan or my insecurity? Is this trade coming from discipline or desperation? That shift, simple but profound, is what separates a hopeful trader from a self-aware one. Trading is not a strategy game. It's an emotional awareness game. Real example. Same chart, different mind. Two traders open the same chart. One sees opportunity, the other sees danger. One holds calmly, the other panics and exits. One follows their edge, the other guesses. Same chart, same candles, but different minds. That's proof the market isn't the variable. You are. And until you train your mind like you train your strategy, you'll stay stuck. Your inner setup is the real setup. You wouldn't take a trade without a setup, right? So why do you start your trading day without a clear mindset, a planned emotional state, tools to stay aware when emotion hits? Tom learned this the hard way. Now, before every session, he asks, 1. Am I clear-headed or anxious? 2. Am I excited to win or committed to process? 3. Can I accept losing today without losing myself? That's how he prepares, not just technically, but mentally. The lesson summary. Your system isn't your edge, your mind is. You don't trade the chart, you trade your emotional state. The market is not your enemy, your reactions are. Until you master your internal world, no external strategy will save you. What to do next? Here's your first assignment. Take a sticky note and write, what part of me is trading right now? Put it on your monitor. Every time you want to enter a trade, pause and ask yourself, is it your discipline, your fear, your ego, or your process? This one question will change how you see yourself and your trades. So before you go tweaking your strategy or buying your next course, ask this instead. What do I believe about trading, and is it helping me or hurting me? Because in the end, it's not the market you need to conquer, it's you. And that's where real trading mastery begins. Lesson 2. Losing is the most important skill. Most people come to trading because they want to win, but those who stay and thrive learn to lose. This lesson might be the hardest to accept because everything about your upbringing, your schooling, and your job has taught you. Winning is good, losing is bad. If you lose, you failed. That logic makes sense in sports, in school, in most of life. But in trading, that logic will destroy you. The reality of trading. In this business, even the best traders in the world, hedge fund managers, professionals, market veterans, they all lose. They lose weekly. They lose monthly. They even have years that end red. But here's the difference. They know how to lose. They know how to take a loss without letting it grow into panic. They know how to lose without changing their plan. They know how to lose and keep showing up the next day with the same calm focus. Because losing isn't a threat to them. It's part of the job. The dangerous belief that must die. Tom Hougaard says the single most damaging belief in trading is this: I should win more than I lose. That sentence sets you up to chase perfect setups, fear every stop loss, avoid necessary risk, get emotionally attached to outcome. It turns every red candle into a crisis. And eventually, it forces you to break your rules just to feel like you're winning again. But what if you change the belief? What if you said instead, I should lose regularly and do it well? Now every loss is not a failure, it's a data point. It's an acceptable cost for participating in the game. Tom's own story, a $127,000 education. Tom shares his breaking point, a 127,000-pound loss in one day. Not because he didn't have a strategy, not because he was clueless, but because he got emotionally attached to winning and refused to take a small loss. The market gapped against him overnight. And just like that, his illusion of control shattered. But here's where it gets powerful. Tom didn't blame the market. He didn't even really blame himself. He studied the feeling that made him ignore the loss in the first place. He examined the panic, the ego, the hope, the fear, the bargaining. And what he found was this: the need to win had hijacked his brain, shifting the goal from winning to losing a well. From that point forward, Tom's goal changed. Not win more, but lose smaller. Lose without panic. Lose without revenge. Lose while staying calm. He began to track how he lost, not how he won. Did I follow my process even though the trade didn't work? Did I stick to my stop? Did I size correctly so the loss didn't rattle me? Those became his new wins. And ironically, once he became great at losing, the wins took care of themselves. The poker lesson that changed everything. Tom once sat with a professional poker player who was on a terrible run. Hand after hand he lost, and never once reacted. Tom finally asked, "How are you staying so calm?" The poker player replied, "I already accepted I'll lose 45% of my hands. My edge isn't in winning more. It's in losing better than the rest of the table." That line hit Tom like a thunderbolt. What if your true edge as a trader isn't in having a better win rate, but in having a better relationship with loss? Practical application: track how you lose. Here's how to use this lesson today. 1. After each trade, win or lose, ask, did I follow my process? 2. Create a loss quality score. Rank each loss from 1 to 5. 0.5 equals fully planned. Emotionally clean. 0.1 equals emotional. Rushed, undisciplined. 3. Reward high-quality losses. Seriously, celebrate them, because they're proof you're trading like a professional. Write this down, sticky note for screen. My edge is not in winning more, it's in losing better. Tape that to your monitor. Because every time you fear a loss, you give your power away. But every time you embrace it, accept it, execute through it, you level up. So the next time you take a loss, pause. Don't ask, what went wrong? Ask, did I lose like a professional or an amateur? That one question will separate you from the 90% of traders who are still chasing the fantasy of constant wins. Because in this game, losing isn't failure. Losing badly is. And when you learn to lose well, you've already won. Lesson 3. Pain brings clarity. Most traders come to the market to escape pain, only to discover that pain is the teacher they actually needed. This lesson may be the most emotionally raw so far, Because we've all been taught to avoid pain. We're told pain is bad. Pain is weakness. Pain means something went wrong. But in trading and in life, Tom Hougaard discovered something deeper. Pain, when handled properly, doesn't break you. It wakes you up. The problem? We don't know how to handle emotional pain. Think about it. You lose a trade. Your body tenses. You get stopped out. You feel stupid. You miss a winning move. You get frustrated and chase the next one. Every time something painful happens in trading, you react. Sometimes with panic, sometimes with anger, sometimes with denial, but rarely with clarity. Why? Because we've never been taught how to sit with pain. Pain isn't the problem. It's the shortcut. Tom realized that most traders lose not because of bad strategies, but because they run from pain the moment it shows up. He puts it plainly. Pain is the shortcut to clarity. It shows you exactly what you believe. If a loss devastates you, it shows you are overattached to the outcome. If a drawdown sends you into a spiral, it shows you built your identity on winning. If missing a trade makes you overtrade, it shows you fear missing out more than you value process. Pain reveals the truth you're hiding from. Tom's radical solution: practice pain on purpose. This part may shock you. Tom created what he calls loss therapy. Here's what he did. Every Sunday, he would fund a small $500 account, and by Friday, he aimed to lose all of it. Not through random gambling, but by taking valid setups with absurdly high position sizes, guaranteeing blowups. Why? To rehearse the feeling of loss, to experience the pain, so it stopped surprising him. He said this training changed everything. Before this exercise, a single loss could ruin his mood for days. He'd try to get back at the market. He'd act from emotion. After this exercise, losses were just events, not personal attacks. His emotional recovery dropped from 3 days to 30 minutes. Revenge trading almost vanished. He desensitized himself to pain, and as a result, he finally became dangerous. Why this matters. The truth about trading stress. Here's what most people don't understand. Your body and brain can't tell the difference between emotional pain and physical threat. To your nervous system, a losing trade can feel like you're about to die. Heart rate spikes, breathing shortens, hands tremble, tunnel vision kicks in. That's not you being dramatic. That's biology. And unless you deliberately train your nervous system to handle that stress, your instincts will betray you every time. Pain versus drama. Now listen closely to this distinction Tom makes. Pain is clean. Drama is dirty. Pain tells the truth. It's honest. Drama is the story you tell about the pain. I'm a bad trader. The market's out to get me. I'll never make it. That's not pain. That's ego, storytelling, and self-sabotage. The goal is to sit with the pain without turning it into drama. Practical tool, the emotional debrief. After every loss, Tom writes down: 1. What did I feel in my body the moment I lost? Tightness, heat, nausea, adrenaline. 2. What was the first story my mind told me? You suck. Get back in now. It's not fair. 3. What's the actual truth? It was a normal trade. Losses are expected. My stop did its job. This emotional autopsy helped him separate raw sensation from ego reaction. And over time, that clarity turned into consistency. Bonus practice. Visualize the worst. Tom often rehearses emotionally painful scenarios before they happen. Imagine missing the perfect move. Imagine a day with 5 losses in a row. Imagine being wrong when you felt 100% right. Why? Because when the real event comes, You've already felt it. And now, you're not shocked. You're ready. Sticky note reminder. Write this and put it on your monitor. Pain is not the enemy. Pain is my teacher. Every time you feel emotional discomfort in trading, ask, what is this pain trying to show me about myself? So many traders spend years trying to avoid pain, switching strategies, overanalyzing charts, chasing comfort. But Tom flipped the game. He ran toward pain. He befriended it. He studied it. And in doing so, he became the one thing most traders never become: emotionally unshakable. Because in this game, the trader who can handle pain with clarity always outlasts the one who only trades when things feel good. Lesson 4. Normal thinking doesn't work. If you think like a normal person, you will trade like a losing trader. This lesson is a punch in the gut for anyone still trying to approach trading with the same mindset they use in everyday life. Because here's the truth: trading is the opposite of how normal people think and behave. In real life, fear keeps you safe. In trading, fear can ruin your plan. In real life, avoiding risk is smart. In trading, avoiding risk kills opportunity. If you don't rewire your mind, your normal behavior will sabotage every trade. The default human operating system. Let's be clear: the way you think isn't your fault. It's biology. You were built to seek comfort, avoid uncertainty, look for patterns, react quickly to danger, feel good when you're right. That was useful when we were dodging predators on the savannah. But in trading, that same wiring turns you into your own worst enemy. How normal thinking shows up in trading. Let's go through the common traps of normal thinking that traders fall into. 1. You cut winners. Too early. Normal mindset says, take what you can get, don't be greedy. But in trading, the big money is made by holding winners. Normal thinking takes small profits and lets losses grow. 2. You add to losing trades. Normal logic says, it's cheaper now, why not double up? But in trading, you just multiplied your risk on a losing position. Smart traders add to winners, not losers. 3. You chase missed moves. Normal thinking says, I missed it, I better jump in before it's too late. But chasing a move that already ran is how most retail traders get trapped. 4. You avoid losses like they're failures. Normal logic sees a red trade and says, I messed up. But a professional says, that loss was part of the plan. Tom's wake-up call. What if normal is the problem? Tom Hougaard realized this the hard way. After years of applying what seemed like common sense, he still failed. He journaled trades with textbook setups that failed, not because of the system, but because his normal responses kicked in. He got scared and exited early. He got hopeful and held losers. He got frustrated and overtraded. His normal brain couldn't handle market logic. So he stopped trying to trade like a human and started training like a contrarian. The trader's mind must be rewired. Tom writes that success came when he started doing the opposite of his emotional urges. Feel scared? Stay in the trade. Feel excited? Step away. Feel the urge to click? Pause. See a perfect setup? Ask, is this emotion or signal? He trained himself to treat normal urges as warning signs, not green lights. The poker analogy: anti-normal behavior. Think of professional poker players. They're masters at acting against their impulses. They fold when they're excited. They bluff when they're weak. They bet big on boring hands. Why? Because success requires thinking like the minority, not the crowd. Same with trading. If you think like 90% of traders, you'll get 90% of their results. From instinct to intention. Let's be real. Your instinct will always try to protect you. Your job as a trader is to learn when that protection is misguided. Tom started asking himself, does this decision feel comfortable or correct? If it felt comfortable, he questioned it. If it felt uncomfortable but correct, he leaned in. That's the trader's edge. Not doing what feels right, doing what's needed. Practice tool, the pause before you click. Drill. Tom developed a 60-second delay system on his platform. Before placing any trade, he had to. 1. Stand up. 2. Say out loud, I am Tom, and I'm about to do something stupid. 3. Wait 60 seconds. 4. Ask 3 questions. Oh, is this my plan or my emotion? Oh, would I teach this move to someone else? Oh, can I afford this trade financially and emotionally? That 60 seconds was the circuit breaker. It saved him from normal behavior hundreds of times. Shift your thinking. Here's what this lesson is saying. No fluff. Normal thinking says, avoid pain. Take profits quickly. Cut losses late. Trade what feels right. I want to be right. Trading thinking must say, accept pain, let profits run. Cut losses early. Trade what's in your plan. I want to execute well. Sticky note for this lesson. If it feels normal, pause. Normal is the losing path. Put that where you can see it, because every moment you sit down to trade, your old habits want to take over. Tom Hougaard didn't succeed by being smarter than everyone else. He succeeded by realizing that his default way of thinking was the enemy. He rewired his mind. And now you can too. Because in trading, thinking like everyone else is a shortcut to failure. But thinking like a trader, intentionally, calmly, and against emotion, is your key to freedom. Lesson 5. Charts can't save you. I used to believe the next setup would fix me, the next chart pattern, the next breakout, the next signal, but they never did. Let's get something clear. Charts are not the answer. Not on their own, not without discipline, not without a stable mind behind the mouse. This lesson is about the lie we've all been sold, that mastering price action will make us rich, that more indicators will give us an edge, that the chart is the key to our success. But, as Tom Hougaard discovered after 2 decades in the markets, the chart is just a mirror. It reflects the trader behind the screen, the illusion of technical mastery. Let's walk through what most traders do when they struggle. 1. They lose money. 2. They change indicators. 3. They add new tools. 4. They switch from candlesticks to Heikin-Ashi to Renko. 5. They try a new YouTube strategy or buy a course. They spend months, sometimes years, searching for the perfect charting method. But the whole time, they ignore the real problem: their behavior, their psychology, their emotional patterns. Tom's toolbox. The setup overload. Tom admits he once chased chart perfection. He used Bollinger Bands, MACD, Gann angles, Elliott wave theory, Fibonacci retracements, RSI, pivot points, market internals, volume spread analysis, and on and on. And guess what? None of them made him consistent. Not because the tools were useless, but because no tool can save you when you're emotionally unprepared to use it correctly. The problem isn't the chart, it's the trader. Here's the hard truth. You don't exit early because the chart told you to. You don't revenge trade because the price action demanded it. You don't miss entries because of indicators. You do those things because of fear, impatience, ego, hope, frustration, and no chart setup, no matter how advanced, can fix those emotional reflexes. Real example. 2 traders, same setup. 2 traders see the same chart. A clean breakout, perfect support zone. High volume confirmation trader. A enters calmly, manages risk, and exits based on plan. Trader B hesitates, chases, over-leverages, panics, and exits at the worst possible time. The difference wasn't the chart. It was the mind interpreting it. That's why Tom says, you don't trade the chart, you trade your nervous system. Trading the chart versus trading your emotions. Here's the critical shift. Most traders believe the chart is the authority, but Tom discovered that the real trade happens before you even click. It happens in your expectations, emotional state, self-talk, level of calmness or urgency. In other words, your inner chart shapes how you see the outer chart. And if your inner world is messy, anxious, or chaotic, you'll project that chaos onto the candles. Why so many smart traders still lose? Tom has worked with highly intelligent clients, engineers, doctors, PhDs, software developers. They know how to read complex data, but they still lose money. Why? Because trading isn't about intelligence. It's about emotional execution. And no level of technical knowledge can compensate for emotional fragility. What actually makes you consistent? Tom realized consistency doesn't come from having the best chart reading skills. It comes from having the discipline to wait, the humility to accept a loss, the calmness to stay in a winning trade, the self-awareness to recognize your impulses. He even says, some of my best trades came when I forgot to check the chart. I was so focused on following my process, the setup didn't matter. Actionable insight. Simplify and observe. Tom suggests this challenge for traders stuck in chart overload. 1. Pick one simple system. Don't add anything new for 30 days. 2. Trade it blindly, but log your emotions. Don't analyze setups. Analyze yourself. 3. Ask after every trade. Oh, what did I feel before, during, and after? Oh, did I follow my plan or react emotionally? This exercise will reveal something most traders never see. The chart is not the source of your results. You are. Sticky note for this lesson. The chart doesn't need fixing, the trader does. That one sentence could save you years of wasted time. So if you're stuck searching for the holy grail setup, if you're tweaking indicators every week, if you're blaming your tools every time you lose, it's time to look in a new direction, inward. Because the truth is simple. A great trader can trade any chart. A struggling trader can ruin any setup. And once you accept that, you stop searching for better tools and start becoming a better tool user. Because in this game, the candle doesn't control you. Your reaction to it does. Lesson 6. Most traders are addicted to winning. Most traders aren't in the market to make money. They're in it to feel good. You think you're here to make profits. You tell yourself you're here for freedom. But the truth might be harder to swallow. You're here for validation. You're here because winning feels good. And losing? It feels like rejection, like humiliation, like you're not good enough. Tom Hougaard realized that behind most losing traders is an emotional addiction, not to money, but to being right. Why winning feels so good. When you win a trade, something happens in your brain. A hit of dopamine, a sense of pride, a story that says, you're good at this. That little win lights up the same brain region as gambling, sugar, and social media likes. And the more you win, the more your brain craves that feeling again. It's not about logic anymore. It's about relief, validation, identity. You're not trading the market anymore. You're trading your self-worth. The problem with chasing wins. Here's where it gets dangerous. When you crave winning you, avoid taking necessary losses. Move stops to give it a chance. Cut winners early to lock in the high. Overtrade to get back to green. Double down to feel in control. Winning becomes a drug. And like any addiction, it makes you irrational. Tom's wake-up moment, 17 wins in a row. Tom once posted 17 consecutive winning trades on Facebook. The comments flooded in. People called him a genius. The dopamine hit was real. Then came the next day. One trade, one emotional mistake, one loss that wiped out everything. But he didn't post that one. Why? Because it didn't feel good. Because it broke the illusion of the winner identity. And that was the moment he saw it. He wasn't trading for himself. He was trading for approval. Trading as emotional performance. Tom realized he was performing, not trading. Holding trades too long to avoid embarrassment. Exiting too early so he could post the win. Taking setups at specific hours. Not for market edge, but for audience attention. At that point, he asked himself the hardest question of all. Would I still trade if no one ever saw my results? And he couldn't answer. The human need to win. Let's break this down simply. Winning feels good because it gives us certainty. I'm doing something right. Control. I can beat this. Status. Others will respect me. Safety. I don't have to face shame today. But here's the dark side. The more addicted you are to winning, the worse you handle losing. And since all traders lose regularly, your downfall is inevitable. The cycle of destruction. Tom maps out the destructive loop most traders fall into. 1. Win feel amazing. 2. Lose feel worthless. 3. Trade emotionally to win again. 4. Overtrade, force setups. 5. Lose bigger sixth spiral. Sound familiar? It's not bad trading that causes this. It's bad identity attachment. The shift from winning to executing. Tom's transformation began when he changed his goal, not to win, but to follow process, not to feel good, but to be present and detached. He even changed how he spoke, not I won, but the trade worked, not I lost, but the setup failed. This shift protected his mind from being defined by results, and the irony? Once he stopped needing to win, he started winning more. Action steps for breaking the addiction. 1. Audit your reasons. Ask yourself, am I trading for results or identity? 2. Delay your reaction to wins. Don't celebrate or post about them. Just record them and move on. 3. Reward clean losses. If you followed your system and lost, write, I executed well today. 4. Practice losing on purpose. Like we discussed earlier, simulate loss until it no longer defines you. Sticky note for this lesson. I don't need to win, I need to trade well. Put that on your screen, let it detox your mindset. Because when you lose the need to be right, you gain the ability to trade with power. Tom Hougaard says, the desire to win is the most dangerous addiction in trading. Not because winning is bad, but because when you need it, you'll trade for emotion, not for edge. And the longer you chase that feeling, the more you sabotage the very thing you came here to do. Because in this game, the one who stops needing to win becomes the one who wins the most. Lesson 7. You are not your P and L. Every time I looked at my profit and loss, I wasn't just seeing numbers. I was seeing my worth. This lesson may be the most freeing of all if you truly absorb it. Because one of the biggest traps in trading is the belief that when I win, I'm smart. When I lose, I'm dumb. When I'm green, I'm a good trader. When I'm red, I'm a failure. We build our entire identity around the numbers. But here's the truth. Your P and L is not a mirror of who you are. It's just a reflection of the outcome of a trade, not your value as a person or your long-term potential as a trader. The emotional roller coaster of outcome-based identity. Most traders live in a fragile emotional loop. Win a trade, feel powerful. Lose a trade, feel ashamed. Big profit, confidence surge. Losing streak, collapse in self-esteem. And so their mood, discipline, and decisions start rising and falling with their account balance. That's not trading, that's emotional roulette. And that's exactly how Tom felt for years. Tom's identity crisis, the numbers, became his name. There was a time when Tom's entire self image was based on performance. He branded himself as a trader. He wore trading themed clothes. He even drove a car with the license plate TRADER1. But then came the losing streak. One bad month, then two, then three. Suddenly, the car felt fake. The clothes felt like a costume. The identity felt like a lie. Because when your worth is built on being the winner, every loss feels like an attack on who you are. Separating self from result. Tom had to unlearn the identity addiction. He started asking, what if I am not my result? What if I'm just the operator of a system? Nothing more, nothing less. What if the trade worked or didn't, but that doesn't say anything about me? He started saying, the system is in a drawdown instead of I'm failing. He rewired his language to rewire his brain. Because how you speak about your results shapes how you experience them. The emotional freedom of detachment. The moment Tom separated himself from the numbers, something shifted. He wasn't reactive anymore. He wasn't trying to prove anything. He wasn't trading to get back to normal. Now he could. Lose without spiraling. Win without ego. Execute without drama. He had become what all professional traders eventually become. Emotionally flat, process-focused, calmly detached. The performative trader versus the professional. There are two types of traders. One, the performative trader, needs to prove they're smart, feels crushed by red days, chases winning streaks, posts their trades for attention, quits when results shake their identity. Two, the professional trades setups, not ego, accepts losses without shame, doesn't need to be right, only consistent, sees the P&L as information, not judgment. Which one are you becoming? Practical shifts you can make today? Here are 3 simple things Tom did to break his identity attachment. 1. Change how you speak about trades. I followed my system, not I nailed it. That setup failed, not I messed up. 2. Review trades without judgment. Look at outcomes as data, not verdicts on your intelligence or future. 3rd, shift your focus from P and L to process. Ask, did I execute well? Was I calm? Did I stay within plan? If the answer is yes, even on a losing day, you won. Sticky note for this lesson. I am not my P&L. I am my process. Repeat it until you believe it. Because when you no longer let your results define you, you become unshakable. You're not the green or red numbers on your screen. You're not your last trade. You are not your worst mistake. You are not your best day either. You are the one who shows up, the one who executes, the one who learns. The P&L is temporary, but your discipline, detachment, and mindset, those are permanent. And when you stop tying your identity to your trades, you unlock a level of freedom and performance that only the top 1% ever reach. Because in this game, the trader who stops needing to prove who they are becomes the one everyone else tries to copy. Lesson 8, the curse of patterns. We see what we want to see in charts, and we call it a strategy. Let's start with a question. How many times have you looked at a chart and said, that's a head and shoulders, that's a bull flag, that's a triple bottom, and you believe the pattern would work because it's worked before. But then the market does the opposite. The pattern fails. You lose money, and you feel confused, frustrated, maybe even betrayed. That's the curse of patterns. They give you confidence without control. Why patterns are so seductive. Humans are wired to look for order and chaos. It's how we survive. We hear rustling in the bushes and assume it's danger. We notice faces in clouds. We connect dots, even when they don't mean anything. In trading, this shows up as pattern recognition. A rising wedge, sell. A double bottom, buy. A breakout candle, go all in. But Tom Hougaard makes a critical point. Just because you see a pattern doesn't mean it's real. And even if it's real, it doesn't mean it will work this time. The psychology behind pattern obsession. Here's the deeper issue. You don't just see patterns because they're there. You see them because your brain wants certainty. You want to believe that price will behave predictably. You want to believe you have control. You want something to rely on when money's on the line. So when a chart looks like a past winner, you convince yourself, this one will work too. But often, that belief is not based on facts. It's based on hope and emotional memory. Tom's eye-opening moment. Tom shares a story of a textbook bullish pattern, clear breakout, confirmation candle, strong volume. He went all in. It failed instantly. The next day, he rechecked his journal and found that the same pattern had failed 4 out of the last 5 times in that exact context. But his mind only remembered the win. His brain filtered reality to support what he wanted to see. That's the curse. Patterns don't just reflect price. They reflect your bias. Pattern addiction. A false sense of control. Most traders build their identity around pattern mastery. They have folders of screenshots. They chase perfection in entries. They obsess over backtests of chart formations. And it's not wrong to study. But here's the trap. When you rely on patterns alone, you give up critical thinking. You become a chart robot, not a decision maker. And when the pattern fails, you don't know what to do. Because your plan wasn't based on risk. It was based on assumption. What professionals do differently. Professional traders see patterns too, but they don't trust them blindly. They ask, what is the context of this pattern? Where's the volume? What's the larger market doing? How many times has this failed recently? How do I manage my risk if I'm wrong? They don't worship patterns. They use them as one piece of a much bigger puzzle. What to do instead of blind pattern trading. Here's how Tom recommends breaking free from pattern obsession. 1. Track your own pattern accuracy. Instead of assuming a double bottom works, go through your journal. What's your personal win rate on that setup? What context makes it work best? 2. Always use risk management. No pattern is a sure thing. So treat every setup as a probability, not a prediction. 3. Trade the setup, not the picture. Don't enter because it looks right. Enter because it fits your rules, your risk parameters, and your market context. The painful truth about pattern failure. Most pattern failures don't cost you money. They cost you confidence. You start doubting your entire system. You tweak your plan. You go back to searching for better setups. You abandon structure and chase new strategies. And now, you're not trading patterns. You're trading emotionally again. That's how pattern reliance leads back to chaos. Sticky note for this lesson. Patterns are not promises. They are probabilities. Stick it on your screen. Because the next time you see a setup that looks perfect, you need to pause and remember. Even the cleanest chart can produce a messy outcome. Tom Hougaard says, the market doesn't owe you because the chart looks nice. And that's a powerful reminder. Patterns are helpful, but not holy. They're tools, not truth. And if you use them blindly, they will eventually betray your expectations. The best traders don't just spot patterns. They test them. They question them. They know when to trust them and when to walk away. Because in this game, The trader who thinks critically always outperforms the one who sees the most shapes. Lesson 9. The myth of the risk to reward ratio. Traders are obsessed with risk to reward ratios, but the market doesn't care about your math. Let's start with a phrase you've probably heard 1,000 times. Only take trades with a 3-to-1 reward to risk ratio. Sounds smart, sounds safe, sounds strategic, but in reality, that idea, when misunderstood, can make you miss opportunities, cut winners too soon, and actually hurt your performance. This lesson is not saying you should ignore risk. This lesson is about seeing the whole truth behind risk to reward, because what works on paper doesn't always work in real trades. What is the risk to reward ratio? Let's get basic. If you risk $100 on a trade and your profit target is $300, that's a 3-to-1 reward to risk ratio. The idea is that even if you only win 40% of the time, you'll still make money long term. That's solid logic in theory. But here's the problem. Most traders misuse this concept. They use it to justify entries they shouldn't take, and they use it to cap trades that had more room to run. The risk to reward trap. Tom Hougaard shares this common mistake. He would enter a trade with a 3-to-1 RR. He'd reach his 3R target, exit the trade, feel smart and disciplined, but then the trade kept running 5R, 8R, 10R, and Tom realized he was cutting his best trade short just because of a ratio, not because of market structure, not because of risk, but because of an arbitrary number he had imposed on the trade. That's when he saw the flaw. The market defines the reward. Your job is to manage risk and stay in the move. Why fixed profit targets can be dangerous. Here's what happens when you always take fixed RR setups. You cut big winners short. You hold on to losers longer because it might come back. You obsess over your R multiple instead of your edge. You ignore the chart once price gets close to your target. You treat trading like math, not like dynamic decision-making. The reality is, most of your edge as a trader comes from a few big winners. Cutting them too early kills your long-term performance. Real-life analogy, the parachute jumper. Imagine you're parachuting toward a moving target on the ground. You calculate your landing, but the wind changes. Your target moves. Would you still land at your original spot because that's what your plan said? Number you adjust. The market is the same. Setting a 3R target and refusing to adjust, even when the market gives more, is like closing your parachute just because you reached your planned height. Backtesting versus live trading. In backtesting, risk to reward makes sense. You have clean data. You know exactly where trades would have gone. But in live trading, emotions exist. Slippage happens, patterns fail, context changes. And that means your job isn't just to hit 3R. Your job is to read what the market is telling you and adapt. Tom's philosophy. Let the market decide the reward. Tom began trading differently. He defined his risk before the trade, but he let the market define the potential reward. He focused on trend strength, key levels, volatility expansion, price action behavior after entry. Sometimes the trade gave 2R, sometimes 12R, and he let it happen without forcing the outcome. Practical application, flexible exit strategies. Here's how you can use this lesson. 1. Use a trailing stop once your trade is up, 2R or 3R. Let the market keep paying you if the trend continues. 2. Divide your position. Take partial profit at 3R. Let the rest ride with a trailing stop. 3. Observe market behavior. Does price stall near your target? Fine, exit. But if it accelerates, Stay in. Learn to be flexible, not mechanical. A warning, don't throw out risk management. This lesson is not saying ignore risk. You must always know your stop loss in advance. Size positions properly. Never risk more than you can emotionally and financially handle. What this lesson is saying, don't treat reward as a fixed ceiling. Let your edge unfold when the market gives you more. Sticky note for this lesson, I define risk. The market defines reward. This is how Tom reframed his entire trading philosophy. The myth of the risk-to-reward ratio is this, that you can trade by numbers alone, that if you stick to 2 to 1 or 3 to 1, you'll win the game. But the market isn't a spreadsheet. It breathes. It evolves. It rewards those who can stay in the move, not just those who measure it. Because in this game, those who let profits run and cut losses quickly are the ones who win. Lesson 10. Add to winners, not losers. Retail traders love to buy when prices fall. Professionals add when prices rise. Let's paint the picture. You take a trade. It goes against you. You think, it's cheaper now. You double down to improve your entry price. You call it scaling in. But really, you're adding to a loser, hoping it turns around. This lesson is simple but powerful. Don't feed losing trades. Feed winning ones. Because in trading, momentum is information. And if a trade is going your way, that's the market rewarding you. That's when you double down, not when you're bleeding. Why traders add to losing trades? Let's be honest, it feels logical. Price is cheaper now, so I'll get a better average. It's oversold. It has to bounce soon. I was early, I'll just build the position. This is how most amateurs think. But here's what's really going on beneath the surface. You're trying to avoid being wrong. You're trying to save the trade. You're trying to fix a mistake while inside the mistake. That's not strategy. That's emotional defense. The real cost of adding to losers, when you average down into a losing trade, your risk gets bigger. Your emotional stress skyrockets. You ignore your stop. You're tied to hoping the market turns instead of reacting to what it's doing now. Tom warns, adding to losers turns one mistake into many. It's a multiplier of regret. Flip the logic. Winners deserve more capital. Let's reframe it. When a trade is moving in your favor, it means you read the market correctly. Your thesis is working. Momentum is behind you. You have edge plus confirmation. This is the moment smart traders think, if the market is proving me right, I'll reward that. So instead of adding when they're scared, they add when they're calm and in control. Not to fix a loss, but to amplify a win. Tom's philosophy, reward, winning behavior. Tom doesn't just manage trades. He uses them as feedback loops. If a trade is working, that's the market saying, yes, you were right. Keep going. If a trade is not working, the message is, nope, let it go. Don't fight me. Tom learned to treat winning trades like they deserved more attention, more patience, and yes, more capital. Because if you want to be in sync with the market, you have to align with its feedback. Real example, scaling into strength. Tom once entered a short on the DAX futures. The trade started working almost immediately. Instead of exiting too soon, he added at logical pullbacks. His final size was 3 times his original entry. And when the trend rolled over completely, he had his biggest trade of the quarter. Why? Because he trusted strength. He added to confirmation, not contradiction. What adding to losers says about you. If you're constantly adding to losing positions, it may signal deeper issues. A fear of being wrong, a refusal to accept reality, a need to rescue yourself, a hope that if you average down, the pain will go away. But the pain doesn't go away. It compounds, emotionally and financially. Tom says, adding to losers isn't just bad math. It's an emotional surrender to the need to be right. Practical steps for scaling right. Here's how to add to winners the smart way. 1. Pre-plan your ad zones. Decide in advance where you will add, only if the trade is in profit and momentum is still strong. 2. Use partial ads. Don't double your size at once. Add 25 to 50% of your position at each level. 3. Only add in clear trends. Don't scale in choppy ranges or unpredictable markets. Scale when direction is clear and confirmed. 4. Tighten stops. As you add, protect your capital as your exposure increases. Sticky note for this lesson. Don't add to problems, add to solutions. Stick this where you can see it, because every time you feel the urge to save a bad trade, ask yourself, am I managing risk or managing my ego? Tom Hougaard flipped the script on the most common trading behavior. Most people add to their losers and exit their winners early. But professionals? They cut their losers fast and feed their winners with confidence. Because in this game, the goal isn't to avoid losses, it's to ride the rare trades that go the distance. And that's only possible when you stop rescuing the bad ones and start building on the good ones. Lesson 11, your brain was built for survival, not trading. You think you're making logical decisions, but really your brain thinks it's trying to keep you alive. Here's something nobody tells you when you start trading. You're not losing because you're dumb. You're not losing because you're weak. You're losing because you're human. You're trying to play a high-speed, money-on-the-line, emotionally brutal game with a brain that was designed for survival in the jungle. The truth? Your brain is 200,000 years old, and it hasn't caught up with the idea of electronic markets, candlesticks, or stop losses. How your brain responds to risk. Let's go back to basics. In prehistoric times, your brain had one job: keep you alive. So it developed systems to detect danger and respond instantly. Hear a noise in the bush, fight or flight, sense uncertainty, freeze and gather information, feel cornered, act aggressively, or run. Now fast forward to today. You open your laptop, you see a candle shoot down. Your position goes red. Your brain doesn't see just a red candle. It sees danger, loss, threat. Act now. And that's when it takes over. The hijacking begins. Fight, flight, or freeze. When you're in a trade that starts to go wrong, your body reacts the same way it would if you were being attacked. Your heart rate spikes, your breathing becomes shallow, your vision narrows, your judgment collapses. Tom Hougaard shares an experiment he did. Resting heart rate, 65 beats per minute. During a losing trade, 138 beats per minute. That's the same heart rate as if he were running from a predator. Try being calm and rational with a heart pounding in your ears. You're not trading the market, you're trading your nervous system. Here's the deeper point. When your trade goes red, you're no longer analyzing the chart. You're reacting to your own biology. You closed too early, not because the setup failed, but because your body screamed, "Get out!" You add to a loser, not because it's smart, but because your brain wants to fix the threat. You hesitate, not because there's no setup, but because fear clouds your judgment. Your ancient brain is running a modern system, and it's short-circuiting under pressure. The trader's brain versus the survival brain. Let's compare two operating systems. Trader brain, stick to the plan. Let the trade breathe. Accept the loss. Risk is part of the game. See the difference? Survival brain, get me out now. Take profit before it vanishes. Maybe it'll come back. Don't give up. Risk is death. Avoid it. Trading success is about overriding your default programming, not with motivation, but with training. What Tom did to retrain his brain. Tom didn't just read psychology books. He treated trading like a mental performance sport. And just like athletes train under pressure, he trained himself to stay calm in chaos, breathe through red candles, sit with discomfort instead of reacting to it. He used tools like meditation, simulation under emotional pressure, journaling real-time feelings, rehearsing worst-case scenarios. The goal? Desensitize his nervous system to the fear of loss until it became just data. The science of overcoming fear. Tom points to neuroscience here. The amygdala, the fear center in your brain, is hypersensitive to uncertainty. But when you expose it to the same stress over and over, it calms down. It learns, this isn't a lion. This is just a trade. The more you sit with the discomfort without reacting, the more your prefrontal cortex, the logical part of your brain, stays in control. And that's when trading becomes execution, not survival. Why traders from chaotic backgrounds struggle more. Tom also references research. Traders who grew up in unstable or traumatic environments often have overactive amygdalas. Children of divorce, people from volatile homes, those who experienced early emotional instability. These traders are more likely to exit too early, hesitate in fear, avoid losses at all costs, react impulsively. Why? Because uncertainty triggers old survival patterns, patterns rooted in fear, not trading logic. How to start retraining your mind. Here's what you can start doing today. 1. Journal your physical reactions. Track what your body does during trades: tight chest, racing thoughts, panic. 2. Meditate before trading. Even 5 to 10 minutes can lower your baseline stress and boost focus. 3. Use a breathing anchor. When the market moves fast, stop, take 3 deep breaths, and say, this is just a trade. 4th, simulate emotional scenarios. Replay losses, rehearse missing trades. Train your brain to sit with discomfort instead of running from it. Sticky note for this lesson. This isn't danger. This is just data. Let that rewire your nervous system one trade at a time. Tom Hougaard's biggest breakthrough wasn't technical. It wasn't strategic. It was physiological. He trained his body to stop reacting like he was under threat. And once he did, he held winners longer, he cut losers faster, he entered without hesitation. He traded with calm, even in chaos. Because in this game, the trader who masters their nervous system always outperforms the one chasing perfect setups. Lesson 12. Most people don't want to change. Everyone says they want to succeed in trading, but very few are willing to become the person who can. Let's start with a hard truth. Most people don't actually want to improve. They want the feeling of progress without the pain of transformation. They want a shortcut. They want convenience. They want a better life without giving up the habits that are destroying them. Tom Hougaard learned this the hard way, not by judging others, but by observing himself. He realized trading doesn't just require better strategies. It requires a better you. Why change is so hard? We all say we want to grow, but growth always comes with discomfort. It requires admitting your current self is not good enough. It demands that you let go of the identity that feels safe. It forces you to confront your flaws without excuse. Most people won't do that. They would rather be consistently unprofitable than emotionally uncomfortable. What most traders do instead. Here's what the majority of traders actually do when they struggle. Blame the market, change indicators, switch time frames, look for a new course or strategy, blame their broker, news, or social media. But what they never do? Examine themselves. Tom says, until you realize you're the problem, you can't become the solution. The illusion of progress. There's a very specific danger Tom warns against: mistaking movement for change. This looks like reading dozens of trading books without changing behavior, binge watching YouTube but avoiding journaling, joining Discord groups to learn but never following a plan, downloading new indicators instead of managing risk better. These are all forms of distraction dressed up as effort, and they keep traders busy, but not better. Tom's wake-up call, the mirror moment. Tom reached a breaking point during a long drawdown. He realized he wasn't just losing money, he was refusing to evolve. He kept searching for tactical solutions when the real issue was internal. He was emotionally attached to being right. He avoided pain. He was still operating from an identity built on ego, not excellence. That's when he asked himself the question that changed his life. Am I willing to become someone new? Or do I just want to keep being me, but richer? Change requires identity. Death. This is what most traders don't want to hear. To become the trader you want to be, you have to let go of the trader you are. That means letting go of your need to win, releasing your attachment to being smart, surrendering your desire to feel good all the time, accepting that you're not in control of the market, only yourself. Tom says, the trader who grows the fastest is the one who dies the most inside. It sounds dramatic, but it's true. Real change is brutal. It breaks your identity, and that's why most avoid it. What real change looks like. Tom outlines what actual transformation looks like. 1. Journaling your emotions daily, even when it's painful, especially then. 2. Following your rules on red days, no matter how much you want to deviate. 3. Letting a winner run past your comfort zone, even when your brain screams to exit. 4. Not trading at all when you're emotionally off, even if you feel the itch. These acts seem small, but they are evidence of a changing mind. A mental shift that signals growth. Tom says there's one sentence that shows you're finally serious about change. I don't care how it feels. I care if it's right. When that becomes your compass, not emotion, not ego, not outcome, you've crossed over into professional thinking. Sticky note for this lesson. I want to grow more than I want to feel good. Put that on your screen. Because every time you're tempted to avoid the hard thing, remember, that moment is the change. Ending this lesson. Change in trading is not just about systems, tools, or education. It's about evolution. You cannot stay the same and expect different results. You cannot cling to your current habits and magically become consistent. Tom Hougaard became successful not by finding the best setup, but by becoming the kind of man who could handle the setup. And you can too, but only if you're willing to trade your comfort for your transformation. Because in this game, the trader who wants to grow more than they want to feel safe is the one who wins in the end. Lesson 13, trade through the slumps. Slumps are not just part of trading. They are the test that separates survivors from tourists. Let's get real for a minute. Every trader will go through a slump. Not if, but when. A brutal drawdown. A losing streak that makes you question everything. A stretch where nothing works. No setup, no plan, no instinct. And here's the truth. Slumps don't break your system. They break you. Unless you learn to trade through them, intentionally, consciously, and with resilience. You won't last in this game. What a slump feels like, you know the feeling. You take a loss, then another. You stop trusting your plan. You hesitate. You skip trades that end up winning. You take revenge trades that lose. Your confidence evaporates. You start Googling new strategies at 2 a.m. You wonder if you're just not cut out for this. Tom Hougaard has been there many times. And he says, the slump is not a sign to quit. It's the moment to decide who you're going to become. Why slumps hurt so much. Slumps feel personal, but they're not. They hurt because they shake your sense of control. You followed the rules and still lost. You did everything right, but the market disagreed. You tried harder and got punished. That dissonance creates emotional chaos. Your brain screams, "This isn't fair. I'm failing." Maybe this was all luck. But none of that is true. Slumps are not evidence of failure. They're a feature of probability-based systems. The nature of trading systems. Tom emphasizes something most traders ignore. A good trading system still has losing streaks. Even the best strategies in the world, used by professional funds, can have 10, 15, even 20 losses in a row. And yet they keep going. Why? Because they understand this law. Probability plays out over hundreds of trades, not a handful. But the average trader gives up by trade number 5. Tom's slump, the worst month of his life. Tom shares about his worst trading month, 19 consecutive losses. Every trade that followed the rules, but still failed. A system that had worked for years, now in the red. Doubts creeping in. Maybe I've lost my touch. But here's the detail that matters most. He kept trading. He showed up the same way on trade 20 as he did on trade 1, and trade 21, and so did number 21 and number 22. The system hadn't changed. Only his ability to withstand pain had been tested. The real purpose of slumps. Tom reframes slumps beautifully. They're emotional detoxes. They strip away illusions of control, addictions to winning, ego-driven expectations, the false belief that trading should feel good. Slumps humble you. They quiet the noise, and they force you to choose. Do I need to win, or do I need to be consistent? How to trade through a slump. Tom offers a framework for navigating dark stretches. 1. Focus on process, not P&L. Judge yourself on one thing only. Did I follow my rules? If the answer is yes, it's a win, regardless of outcome. 2. Trade smaller. Reduce size if you need to, but don't abandon the system. Staying engaged is key. 3. Increase awareness, log everything, not just trades, but emotions, urges, doubts. This builds emotional immunity. 4. Don't go strategy shopping. Changing systems mid-slump is like switching planes mid-air. Trust the process you built during clarity, not the feelings you have in despair. The slump is the gateway to mastery. Tom says, you don't grow as a trader when everything works. You grow when it doesn't, and you keep going anyway. That's where emotional resilience is born. Not in green weeks, but in red months. Every trader you admire has gone through slumps. The difference is, they didn't quit when things got ugly. Sticky note for this lesson. I follow my system, especially when it hurts. Tape that to your screen. Because the voice in your head will try to convince you to abandon ship when the pain sets in. That's when you remind yourself, this slump isn't breaking you. It's building your ability to stay. Most traders never make it past their first major slump. They give up. They chase new systems. They disappear from the game quietly. But the ones who win, they do the boring, beautiful, brutal thing. They keep showing up. They execute. They hold the line because they understand the most important lesson of all. Slumps don't end when you feel better. They end when you outgrow them. And in this game, the trader who trades through the pain becomes the one who never has to trade from pain again. Lesson 14. Slumps are psychological, not strategic. The biggest mistake traders make during slumps is assuming their strategy is broken. 9 times out of 10, it's not. Let's start with something that might make you pause. Most slumps are not caused by bad setups. They're not caused by the market changing. They're not even caused by bad luck. They're caused by you, by your reaction to the losing, by your doubt, by your impulse to fix what's not actually broken. This lesson is a psychological gut check because it's not about better entries. It's about better mental endurance. What actually happens during a slump? Here's how it usually plays out. 1, you have a few losing trades. 2, your confidence drops. 3, you start questioning your edge. 4, you begin tweaking your rules. 5, you trade safer. You hesitate, skip valid setups. 6, you start missing winners. 7, you overcorrect and revenge trade. 8, you spiral deeper. Sound familiar? This isn't strategy failure. This is psychological contamination, the brain's default response to loss. Let's look at it from a biological level. Your brain hates uncertainty. When you win, everything feels right. When you lose, your brain searches for a reason, something to change so it doesn't happen again. That's survival instinct. It's primitive. But in trading, that instinct leads to destruction because you're trading a game where losing is normal. If you expect to win every time, you're fighting the very nature of the business. Tom's example. When his system was fine, but he wasn't. Tom shares a period where his win rate dropped from 58% to 42% over 2 weeks. His strategy hadn't changed. The market hadn't gone wild. But he was tweaking everything: entries, exits, timeframes. He started hesitating on his A-plus setups. He passed on trades that matched his plan. He jumped into low-probability trades just to feel active. And the deeper he fell, the more he changed the system, which only made things worse. Until finally he stopped and asked himself, is this a strategy slump or a self-trust slump? The real battle: self-trust versus strategy. Tom says slumps are almost always a loss of emotional discipline, not a loss of edge. Because here's what people forget. The market has no idea what your last trade was. It doesn't know you're in a slump. It doesn't care about your pain. It's just moving. But you bring the last 5 losses into your next trade. You tighten stops too soon. You bail early to avoid another red one. You adjust targets based on feelings, not facts. And that's when your results collapse. Not because the system failed, but because you did. What professionals do in slumps. Tom learned from institutional traders who handled slumps very differently. They expected them. They stayed detached. They kept risk the same. They reviewed performance without emotional storylines. They didn't change systems during stormy weeks. They knew that slumps were part of the long game, and that their job was not to fix them, but to trade through them with minimal damage. How to survive a psychological slump. Here are Tom's steps for trading through the mental fog of a slump. 1. Journal emotion. Before adjusting strategy, before you change any rule, write down what you're feeling. You'll often find you're not reacting to the system. You're reacting to fear. 2. Return to your core. Setups trade only your highest quality setups. Not the maybes, not the just this one. Only what you've tested and trust. 3. Simulate. Don't experiment. Instead of changing the system, Test it in replay mode. Don't risk real money on emotional tweaks. 4. Define the slump by behavior, not results. Ask, am I executing well? If yes, then the slump is temporary. If no, then focus on fixing you, not the market. The slump rule that changed everything. Tom eventually created a personal rule. No strategy change for 30 trades, no matter what. That one commitment forced him to stay consistent, to collect enough data, to stop reacting emotionally. And every time he honored that rule, the slump ended. Not because the system improved, but because he stopped making it worse with doubt. Sticky note for this lesson. My system doesn't need fixing. My emotions do. Let that sentence be your anchor in the storm. So many traders destroy their edge, not because it stops working, but because they abandon it too early. They confuse discomfort with dysfunction. They see normal losses as signs of failure. They throw out systems that were fine because they weren't fine emotionally. But trading mastery means accepting this truth. Slumps are part of the cycle. They test your psychology, not your system. And in this game, the ones who trade through doubt without destruction are the ones who build accounts that last. Lesson 15. Rituals keep you grounded. Every chaotic trade I've ever taken happened on a day I didn't follow my routine. This lesson is subtle, but powerful. It's not about indicators, not about market structure, not even about trade management. It's about something far more foundational: rituals. What you do before the market opens, what you do after a loss, what you do when you feel fear creeping in. Those routines can mean the difference between emotional trading and professional execution. Why rituals matter in a chaotic game? The market is unpredictable. You never know what the news will bring, if your setup will play out, how your next trade will go. But you do know you. You can control your preparation, your mental state, your process. Rituals are how you create consistency in an inconsistent world. They anchor you. They remind you of who you are, especially when the pressure hits. Tom's experience from emotion to intention. Tom didn't always have rituals. He used to start his day like most traders. Wake up, check charts immediately, react to the open, enter a trade in the first 10 minutes, spiral from there. But then came a stretch of heavy losses, not because of bad setups, but because he was emotionally unprepared. That's when he asked himself, what if I started trading like an athlete? With discipline, with preparation, with ritual. The birth of a daily routine. Here's what Tom began doing every morning, before even opening a chart. 4:45 a.m., wake without an alarm. His body knew the rhythm. No chaos, just intention. 5 a.m., meditation in silence. Not for spirituality, for emotional stability. To slow down his mind before the storm. 5:20 a.m., gratitude journaling. 3 things he was thankful for. Not because it changed the market, but because it changed him. 5:30 a.m., trade review, no judgment. He looked at the prior day's trades with one lens. Did I follow process? No celebration, no self-blame, just facts. 5:45 a.m., set the day's intention. He would write one sentence. I trade to stay awake, not to take. I seek awareness, not outcome. Today, I trade through process, not pressure. That became his compass. The power of pre-market rituals. These simple habits did something incredible. They slowed his nervous system, reduced impulsive trades, increased emotional self-awareness, created mental space between stimulus and response. Suddenly, Tom wasn't reacting anymore. He was responding. And that's when he became dangerous, not because of better analysis, but because of better presence. Rituals versus discipline. Here's a distinction Tom makes. Discipline is a decision. Ritual is a system. You can choose discipline, but in moments of stress, it often disappears. Ritual, on the other hand, is automatic. You do it whether you feel good or bad. You follow it because it's you. You don't have to think. You just act. That's why rituals outperform willpower in the long run. The days without ritual. Tom documented something fascinating in his journal. Every day he skipped his routine, he overtraded, he chased setups, he broke his rules, he lost more and felt worse. The chart was the same, the market was the same, but he wasn't. His mindset wasn't anchored, and it showed. Build your own ritual. Start small. Here's how to begin crafting your own stabilizing routine. 1. Pick 2 to 3 morning anchors. These could include 5 minutes of breathing, writing down your trading rules, reading a past journal entry, visualizing your ideal execution mindset. 2. Define your trading intention. Write a one-sentence mantra. Example, today, I trade for precision, not profit. 3. End your session with reflection. Don't just close your laptop. Ask, did I follow my system? What emotions came up? What did I learn about myself? Sticky note for this lesson. My rituals protect my edge. It's not just the system. It's the mindset that executes it. And rituals create that mindset. In a world of flashing candles, economic news, and emotional chaos, your best weapon is rhythm. Tom Hougaard learned that performance comes from predictability, not from predicting the market, but from predicting himself. And he built that predictability through rituals. Because in this game, the trader who controls the chaos inside always handles the chaos outside. Lesson 16, practice losing on purpose. You fear losing because you've never trained for it. So I did the unthinkable. I made myself lose again and again. Let's stop right here. Most traders spend their entire careers trying to avoid losses, trying to escape pain, trying to figure out the market so they never have to suffer again. But what if that's the exact reason they keep failing? What if the problem isn't losing, but that you've never learned how to lose well? Tom Hougaard did something no trading course will ever teach you. He practiced losing deliberately, not to punish himself, but to rewire his relationship with pain. And it worked. Why you fear losing so much? Let's be honest. It's not just the money that hurts when you lose a trade. It's the meaning you attach to it. I'm not good enough. I knew I shouldn't have entered. I'll never get this right. I'm falling behind everyone else. The loss itself is often manageable, but the emotional storm that follows, that's what breaks most traders. And Tom realized, I wasn't afraid of losing money. I was afraid of the feeling of losing. So he set out to face that fear, intentionally, repeatedly. The exercise weekly loss therapy. Here's what Tom did. Every Sunday, he funded a small $500 account. His goal? Lose it entirely by Friday. Not by gambling, not by acting stupid, but by taking real trades with position sizes so large, the risk of blowing up was guaranteed. He called it loss therapy. It sounded crazy. Even his broker called him asking if his account had been hacked. But Tom wasn't being reckless. He was being intentional. He was inoculating himself against the shock of loss. What he learned from forced failure. Here's what started to happen after a few weeks. He stopped flinching when a trade went red. He no longer checked his account 20 times a day. He didn't feel shame when his stop got hit. He began treating losses like normal events, not emergencies. He tracked it in his journal. Before loss therapy, emotional pain after loss, 8 out of 10. Time to recover from a bad trade, 3 to 4 days. Likelihood of revenge trading, 67%. After 6 weeks. Emotional pain after loss, 3 out of 10. Recovery time, 30 minutes. Revenge trading likelihood, 12%. The results were undeniable. The science behind it. This isn't just mindset stuff. It's neuroscience. When you expose your nervous system to the same stimulus repeatedly, it adapts. Firefighters get used to danger. Surgeons get used to pressure. Soldiers get used to chaos. Why should traders be any different? Tom says, every loss used to feel like a crisis. Now it feels like feedback because he had trained for the pain. The real point of the exercise. Let's be clear. Tom wasn't trying to teach his brain to enjoy losing. He was teaching it to survive it, to stop treating loss as trauma and start treating it as information. Every losing trade became a representative, a psychological push-up, not for his strategy, but for his emotional stamina. And the more stamina he had, the more he could sit inside the discomfort and trade like a pro. The unshakable advantage. When you've rehearsed loss over and over, something powerful happens. You stop overreacting. You stop avoiding red trades. You stop needing every trade to be a winner. You stop needing to feel good to act correctly. That's what Tom calls emotional immunity. Most traders try to build technical edge, but the real edge is being the calmest person in the room when everyone else is panicking. Try this modified exercise. Yourself. You don't have to blow up an account, but here's how to apply Tom's idea safely. 1. Simulate losing trades. On weekends, replay charts and take valid trades, using random exits to create discomfort. 2. Journal your reaction to losing. Write down how it feels. Rate the pain from 1 to 10. Watch it reduce over time. 3. Commit to one red trade per week. Take a trade knowing it might lose, and focus on how well you execute, not whether it works. This isn't about throwing money away. It's about training your nervous system to remain neutral. Sticky note for this lesson. A losing trade is just a rep. Train for it. Because if you only train for winning, you'll collapse the moment it doesn't happen. Tom Hougaard didn't become consistent by learning how to win more. He became consistent by learning how to lose better. He realized that fear of losing is what drives most bad decisions. So he faced it head on. And now, he doesn't flinch at drawdowns. He doesn't chase profits. He doesn't fight losses. He just trades with peace and power. Because in this game, the trader who has made peace with loss is the one who wins without fear. Lesson 17, detach from outcomes. The less I cared about the outcome, the better I performed. Let's begin with a brutal truth. Most traders wake up every day with one question in mind. How much can I make today? They open their charts already emotionally attached to an outcome. This better be a green day. This setup has to work. I can't afford to lose again. But here's the problem. The more attached you are to a result, the less control you actually have. Why? Because in trading, outcomes are never guaranteed. Only your behavior is. Tom Hougaard realized that peak performance didn't come from wanting to win more. It came from wanting less from the outcome. The curse of needing to win. When you're attached to outcome, every trade becomes loaded with emotion. A small loss feels devastating. A minor drawdown ruins your focus. One missed trade sends you into revenge mode. A green trade that doesn't hit your profit target feels like failure. You start to over-monitor your trades, exit too early to lock in, move your stop to protect profit, skip valid trades because you're due for a loss. This is no longer trading. It's emotional gambling. what attachment really is. Let's get psychological. Attachment is the emotional energy you place on needing something to go your way. It sounds like, I need this trade to work. I hope this one gets me back in the green. I can't take another loss. It creates pressure, and pressure clouds clarity. Tom says, when you care too much about the result, you stop seeing what the market is actually doing and start seeing what you want it to do. Tom's breakthrough, the day he didn't care. Tom shares a story about a trade he entered with zero expectation. He placed it like he was placing a grocery order. He didn't hover over the chart. He didn't check the P&L until the end of the day. That trade hit 8R. Not because he did something special, but because he was calm enough to let it work. He realized that his best trades came not when he wanted to win, but when he was fully present and emotionally detached from the outcome. Detachment equals power. Detachment doesn't mean you don't care. It means you care about the right thing. You care about execution. You care about discipline. You care about showing up, not being right, avoiding loss, making today a green day. Tom puts it simply, your job is to place trades. The market's job is to decide what happens next. The more you stay on your side of that equation, the better your results will be. The calmness of indifference. Tom calls this professional indifference. It's not apathy. It's emotional maturity. It's the mindset that says, if it works, great. If it doesn't, I move on. My worth isn't tied to this trade. That's when you trade with patience, poise, precision, because you're not chasing validation anymore. You're just executing. How to practice detachment. Here are 5 ways Tom trained himself to detach from outcomes. 1. Don't check P and L during the trade. Focus on candles, not dollars. Second, journal before you enter. Write down your intention. Example, I'm here to follow my plan, not to win. 3. Use automation when possible. Let your stop and target do their job. Don't micromanage. 4. Reflect on behavior, not results. After every trade, ask, did I act with discipline? 5. Celebrate process wins. Did you hold through discomfort? That's a win, even if the trade didn't pay. Sticky note for this lesson, outcome is not my job. Execution is. Put this somewhere visible every day you trade. Tom Hougaard didn't become consistent by caring more. He became consistent by caring differently. He stopped chasing green days. He stopped obsessing over wins. He stopped treating trading like a slot machine. And he started treating it like a craft. One built on calmness. One built on patience. One built on doing the right thing, regardless of the result. Because in this game, the less you need to win, the more likely you are to win. Over and over again. Lesson 18. Embrace the boredom. Nobody warns you that the real enemy of a professional trader isn't fear. It's boredom. Let's talk about something that sounds harmless, but destroys more traders than volatility ever could. Boredom. When you think of failure in trading, you probably picture huge drawdowns, emotional breakdowns, revenge trades, fearful exits. But Tom Hougaard discovered something far sneakier. It's not the intense moments that ruin most traders. It's the quiet ones. The days when nothing happens, the hours when you sit and wait, the moments where patience is the play, but you crave stimulation, and you end up manufacturing drama that doesn't exist. Why boredom feels so threatening. Let's look at the psychology. You became a trader for excitement, right? To escape the 9 to 5, to feel free, to be in control, to create intensity. But when you sit at your desk and nothing happens, no signals fire, no trades come, no big moves unfold, your brain panics. Am I wasting time? Maybe I missed something. Let me check another pair. Maybe this one's setting up. Let me zoom into a 1-minute chart. Let me just take something. That's not trading. That's emotional itch scratching. The real cost of boredom. When boredom hits, most traders fall into these traps. Forcing a trade that isn't there, trading smaller time frames impulsively, changing strategies mid-session, over-leveraging just to feel something, taking B and C setups because the A ones are too rare. Tom calls it creating movement to avoid stillness. But here's the catch. Stillness is the skill. Boredom is the sign you're finally doing it right. Tom's turning point, the day he felt nothing. Tom shares a moment he'll never forget. He took a solid euro to US dollar trade. His bread and butter setup, it hit target, paid well, played out exactly as planned. But when he exited, he felt nothing. No excitement, no dopamine rush, no internal fireworks, and he smiled. Because that was the moment he realized he'd finally become a professional. The boredom of mastery. Mastery is not thrilling, it's repetitive, it's quiet, it's emotionally flat. Same setup over and over, same process, every day, same risk management rules, same journaling habit. It's not sexy, it's not dramatic, it's not viral YouTube content, but it's real trading. The ones who win long term aren't chasing emotion, they're managing it. Why your brain craves drama. Your brain is a novelty machine. It wants stimulation, it wants activity, it wants feedback. When it doesn't get those things from the market, it tries to create them. That's when you abandon your plan, enter early, exit late, doubt your rules. Just try something new for fun. Tom says, boredom is when your discipline either hardens or dissolves. How to embrace the boredom. Tom offers a framework to turn boredom into a weapon. 1. Expect it before every session. Say, I will likely sit here for hours and do nothing, and that's success. 2. Celebrate non-trading days. If no setup appeared and you didn't trade, log it as a 10 out of 10 performance day. 3. Have a productive waiting ritual when bored. Review journal entries, backtest old setups, visualize execution, write affirmations. Don't fill the void with trading, fill it with preparation. 4th, track the cost of impulsive boredom trades. Keep a journal section called What This Trade Cost Me Emotionally and Financially. You'll stop pressing buttons just to feel something. Sticky note for this lesson. Boredom is the gatekeeper to discipline. Most never get through the gate. But you can, if you stop mistaking stillness for failure. Tom Hougaard learned that the final stage of trading evolution isn't more excitement. It's emotional neutrality. It's quiet consistency. It's a rhythm so stable it bores you. And when you learn to sit with that boredom without acting out, you unlock a level of power few ever reach. Because in this game, boredom isn't the enemy. It's the final boss. Beat it, and the game changes forever. Lesson 19. Self-awareness is the edge. You're not trading the chart. You're trading your beliefs, your fears, your emotional triggers, and you don't even know it. We've talked about strategy. We've talked about execution. We've talked about rituals and discipline. But now we arrive at the heart of it all. The hidden skill that makes or breaks every trader. Not just once, but over and over again. Self-awareness. Because here's the truth. You can't trade well if you don't know who is doing the trading. And most traders have no idea what's driving their decisions. They think it's logic. They think it's strategy. They think it's confirmation signals. But Tom Hougaard says, it's almost always emotion disguised as logic. What self-awareness actually means in trading. Let's define it plainly. Self-awareness means Recognizing your emotional state before it hijacks your decisions. Noticing patterns in your behavior and reactions. Knowing your triggers, FOMO, anger, overconfidence, fear of loss. Being able to pause and ask, what part of me is making this decision right now? This isn't soft psychology. This is survival strategy. Because if you can't see your own mind at work, it will control you. Tom's realization, the patterns weren't in the market. Tom noticed something powerful when he began journaling, not just his trades, but his feelings around them. He found that his entries were early when he felt rushed in life. He held losers too long when he had unresolved frustration outside trading. He cut winners short when he felt undeserving of success. He overtraded after emotionally draining conversations with family or friends. In other words, his trading wasn't just influenced by charts, it was a reflection of his inner world. And once he started paying attention to that world, his performance changed forever. Self awareness is a performance multiplier. Think of it like this: you can have the best system in the world, but if you can't recognize when you're off emotionally, you'll sabotage the execution without even realizing it. That's why Tom says, you're only as good as your ability to notice yourself in the moment. Self awareness helps you. Pause before pressing the button. Walk away instead of revenge trading. Sit in discomfort without flinching. Recognize the difference between instinct and impulse. The mirror exercise that changed everything. Tom began doing something unusual. He recorded himself trading, not just the screen, but his face. Then he rewatched it. He noticed pupil dilation when a trade went red, jaw clenching during drawdowns, breathing changes before making emotional decisions. It was like watching a stranger hijack his body. And he realized, if I can't see my reactions in real time, I don't stand a chance at controlling them. That was the moment he stopped chasing better systems and started chasing better awareness. How to build real-time self-awareness. You don't need a therapist or a camera crew. Start with these simple steps. 1. Name the emotion. Before the trade, before you place an order, ask, what am I feeling right now? Write it down. Anxious, excited, tired, angry, bored. Second track, emotional triggers. Keep a journal of events that led to impulsive trades. Look for patterns in your personal life and market behavior. 3. Use the mirror pause. Before every trade, say aloud, is this my edge or my emotion? Just asking the question creates distance. Create an emotional scorecard. After every session, rate impulsiveness 1 to 10, patience 1 to 10, emotional control 1 to 10. Did I follow plan or follow feelings? Review weekly. Tom's journal, emotional autopsy. Tom kept what he called his emotional autopsy notebook. It wasn't about setups. It wasn't about indicators. It was about him. Example entry. Felt invincible after 3 winners. Arrogance led to oversized 4th trade. Market reminded me who's boss. He read entries from exactly 1 year ago every day to spot emotional seasons. That's not trading. That's mental conditioning. And it's what gave him clarity when most were blind. Sticky note for this lesson. I can't trade what I can't see. Start with myself. Put that on your screen. Because the next trade you ruin won't be because of the market. It'll be because of you. And whether or not you saw yourself clearly in that moment. Tom Hougaard says it best. Self-awareness is the edge before all edges. It's the one thing that makes every other tool actually work. You can have the right system, the right risk management, the right entries and exits. But without awareness, you're flying blind with a weapon you can't control. Because in this game, The trader who sees the market clearly wins, but the trader who sees themselves clearly wins forever. Lesson 20. The best loser wins. Winning isn't the goal. Losing better is. You've heard the title. You've probably repeated it in your head. The best loser wins. At first, it sounds like a contradiction, like something a motivational speaker would say to soften the blow of defeat. But for Tom Hougaard, and for every trader who's made it through the fire, it's the core of everything. This is not just a quote. It's a way of trading. It's a way of thinking. It's a way of living. And if you absorb this one lesson deeply enough, you may never look at the market or yourself the same way again. Why we've been trained to avoid losing. From a young age, we're told, get the right answers, win the game, be the best, avoid failure, don't disappoint others. In school, work, society, losing is treated as weakness. So when we bring that mindset into trading, here's what happens. A losing trade feels like personal failure. A red day becomes shame. A losing streak turns into an identity crisis. But trading isn't school. It's not sport. It's not life and death. It's a game of probabilities. And in a game of probabilities, losses are not mistakes. They're data. Why winning traders lose more than you think. Let's break a myth. Great traders don't win all the time. In fact, they lose often. But here's what makes them different. They lose small. They lose calmly. They lose without emotional collapse. And they lose without changing systems, identity, or direction. Tom studied thousands of trades, his own and others. He found something staggering. The most successful traders had nothing in common, except one thing, their ability to lose without flinching. Losing well versus losing poorly. Let's make this distinction clear. Losing poorly looks like increasing position size to win it back, blaming the market, seeking external validation, hesitating after a loss, breaking rules to avoid red numbers. Losing well looks like accepting the loss instantly, logging it cleanly, moving to the next trade, feeling nothing, just following the system. One type builds equity, the other drains it. Tom says, most traders try to get better at winning. Pros get better at losing. What it means to win through loss. Tom's greatest growth came not during winning streaks, but in the painful stretches. The times he journaled with tears in his eyes. The weeks when nothing worked, but he kept trading. The moments when he wanted to walk away, but didn't. That's where resilience was born. That's where professionalism was forged. Because winning doesn't teach you how to trade. Losing teaches you how to trade. And losing well teaches you how to win. The emotional skill of mastering loss. Tom eventually developed a mindset most traders never reach. He didn't fear red candles. He didn't react to losing trades. He didn't doubt himself after bad days. He didn't shrink when the market punished him. Because he had trained his nervous system to understand this is part of the process. Not emotionally, not intellectually, but viscerally. He had rehearsed losing so many times that when it happened live, it was just another trade. Your new relationship with losing. Here's how to begin becoming a best loser. 1. Change the meaning of loss. It's not punishment, it's performance feedback. You're not failing, you're evolving. 2. Create loss rituals. Every red trade, log it, rate your execution. Write what you do differently, then let it go. 3. Track your emotional response to loss. Are you shrinking, hesitating, overtrading? If so, you're still personalizing it. 4. Measure success by your reaction, not your result. Good day. I traded with poise, even if it ended red. Sticky note for this lesson. My edge isn't in winning more. It's in losing better than others. That sentence alone can save you years of frustration. Tom's final transformation. Tom shares the day he knew he had changed. It was a 6-trade red day. All valid setups, all small losses, nothing dramatic. He closed his platform. He exhaled. And he felt fine. Not numb. Not proud. Just balanced. I followed my system, he said. That's what I'm paid to do. That's when he knew. He wasn't trying to win anymore. He was trying to execute. And ironically, that's when the winning became consistent. So here we are, 20 lessons later. You've seen the strategies, the psychology, the rituals, the mistakes, the breakthroughs. But if you remember nothing else, let it be this. In trading, the best loser wins. Because the one who loses without drama, the one who shrugs off red days, the one who doesn't need to be right, the one who keeps showing up calmly, focused, and detached, that trader becomes unstoppable. So the next time you see a loss, don't fight it. Don't fear it. Don't chase it. Just say, good. That's one step closer to mastery. And move on. Because in this game, you don't need to win every trade. You just need to be the last one standing, calm, consistent, and ready to go again.